Well, howdy there folks, and welcome into today's video. Hope you guys are doing great out there as always. Today we're going to talk about how I would invest $1,000 in the stock market right now. I'm going to pretend we're going to play a hypothetical game, okay? The hypothetical game here today is that, let's say my children, let's say they were grown and they were a little older and they had $1,000 and they're like, Dad, I need you to invest my $1,000 for me, okay? And what we're going to go through is 4 scenarios here, okay? I'm going to tell you exactly how I would invest that money in the stock market if we were talking about they wanted to be super safe. They were like, Dad, I want you to just invest this money as safe as possible, take as little risk as possible. Then we'll go through a scenario, what type of stocks would I invest in, or, you know, different indexes and things like that would I invest in if they wanted to take medium risk in the market, okay? They're like, I want a little, you know, maybe a little bit of an outsized gain, but I also maybe looking to take a little more risk, right? Then we'll go through a scenario where they're looking for high risk and high reward. What type of stocks would I buy? Would I be doing option plays, things like that? And then at the end, we'll go through a maniac one, okay? We'll say they want to take crazy risk. They're trying to double up this money, triple up this money in the course of a year, but they're also prepared to lose all the money if possible, okay? So we'll go through all 4 of those scenarios in this video here today. And for this video, we're gonna basically assume we're using a brokerage in which you can place trades for free. And like I say, in the United States, there's plenty of options nowadays to pick from as far as investing for free, essentially, as far as you don't have to pay a commission on that. Even my brokerage that I've been using for the last decade plus, Fidelity Investments, even they basically offer free trades. And Webull does as well, by the way. I got a link down there. It might be pinned comment. Get 2 free stocks valued up to $2,300 when you sign up for an account with Webull and deposit $100, okay? And also, we're going to assume we're going to be able to do fractional shares, because some of these different funds I'm talking about here today, or some of these stocks, could actually potentially be more than $1,000. And I know this video we're talking about how to invest $1,000, and this could be the same for if they came to me with $2,000 or $5,000 or something like that. So yeah, I hope you guys enjoyed today's video. Hope you get some good value out of it. Hope you enjoy it. If you don't mind, smash that like button. That helps out huge YouTube algorithm. I appreciate all you guys for being here as always and helping with the YouTube channel. I hope you appreciate me taking some time out of the day to record this video for you guys here today, okay? So let's go through a super safe strategy. That's the easiest one of this bunch. If they wanted a super safe strategy, I would say just invest in the Vanguard 500, which is VOO, okay? V-O-O. What this does, essentially, it just tracks the S&P 500. So however much the S&P 500 is going to go up or down is however much their $1,000 or $5,000 or whatever is going to go up or down, okay? Now, over time, where's the stock market go? Up. Doesn't mean it goes up every month or every year or something like that, but most of the time, stock market goes up. And so they're going to make money in this over the next 5, 10, 15, 20 years. This is not going to be the best ROI they could get out there, in my opinion, at all. However, it is solid, and especially if, let's say, they didn't care about stock market picking and they didn't care about putting in the research work and looking at the financials and looking at, you know, the company fundamentals and the management team. Let's say they didn't care about that. Sweet. Still make money in the stock market, throw your money in VOO, and make some money over time. Hopefully you get your 7 to 8% per year on average, and there's no shame in that game, okay? Nothing at all. That's solid, okay? Now, let's get into some more fun stuff. Let's talk about if they want to take medium risk in the market. Here's exactly what I would do with their $1,000. And remember, we're talking, you know, I could buy fractional shares and those sorts of things, okay? I would split the money up in 4 different things with this medium risk portfolio, essentially, okay? First thing is I would buy Facebook stock. Facebook stock, always, it's just always a buy. That's just bottom line. Like, it doesn't matter what Facebook's trading at. I've never seen Facebook trade at a value that made me say Facebook's a ripoff. Ever, okay? Or even remotely close to that. Facebook's always buy 100, 200, 300. It really doesn't matter. I mean, if Facebook's trading at, $2,000 a share today, I feel a little bit different. It is not a buy anymore, okay? But as long as Facebook's under $500, that stock's a buy for the long term, okay? So that's the first stock I'd put the money in. Second stock, or fund this one, I would put in VOO, the Vanguard 500. I'd split the money there. 25% of the money would be there, right? So it tracks S&P 500. Remember, they're not trying to be just an individual stocks for a medium risk, right? Next stock I would buy, Amazon, right? Amazon stock. So this is a little higher valuation, so you're taking a little more risk, right? Amazon usually trades at forward P of 50 to 80. Right now, Amazon's probably trading at about a 60 forward P, if I had to guess, somewhere around there. So I'd put the money in Amazon, essentially. I love Amazon, the business model for long term. I don't love the valuation. I don't love paying a forward P of 60-ish for a company like Amazon that's been around for 20 plus years. However, Amazon is still a growth beast. They continue to grow that business, and they should continue to grow for years to go in the future. So Amazon. Next stock I would put on is Corsair Gaming, CRSR. This is a little, I don't even really want to call this such a high-risk play, because this is a company that's in the gaming industry, right, and the streaming industry, trades at a forward P of about 16, which is extremely cheap in the stock market, extremely cheap, especially considering Corsair Gaming is going to likely grow for years and years to go in the future, if not, for this entire decade of growth ahead of this company. So I look at that. That's where I split the money. 25% in Facebook, 25% in VU, which tracks the S&P 500 essentially, 25% in Amazon, and 25% in Corsair Gaming. And I would call that kind of more of a medium risk portfolio. Man, I mean, for me personally, I still honestly kind of consider it low risk, to be completely honest. I feel like that's not that high risk. But for some folks, it might be like, oh, that might be high risk for them, right? Individual stocks at all might be high risk for them. So I would consider, let's just call it medium risk, okay? Now let's get into the high risk, high reward portfolio. Now we're starting to get to some fun. And then we're going to get into the Maniac one, okay? So high risk, high reward. We're obviously looking to, with this portfolio, we're looking to try to outperform the stock market, right? We're not going to just try to do the same as the stock market. Otherwise, like, why are we taking more risk, right? This is a portfolio we're trying to definitely outperform the market. The last one we're trying to outperform as well, but this is the one where we're really trying to double up the S&P, triple up the S&P, quadruple up the S&P, right? So let's say in a given year, the S&P 500 goes up 10%. We're trying to be in stocks that are going to grow 20%, 30%, 40%, things like that, okay? So in the high risk, high reward portfolio, I'd put all the money in 3 different positions. So I would divide it about 33.3% throughout all 3 different stocks essentially here. We're all in individual stocks now, okay? First is Tattooed Chef, TTCF. So this is a stock I love. Obviously, it's a little higher risk play because it is a super big growth company. The valuation is about $1.6 billion or so for that company right now, which some folks would say, well, they're not doing the sales to support that sort of valuation. The way I look at it is this is a company that's growing revenues 50-60% and should continue to for literally as far as I can see. Like it's hard for me to see, a day when Tattoo Chef isn't, experiencing extremely strong growth. I don't know how long they can keep a 60% growth for, but as far as growing at double digits rates, I expect that through pretty much the entire decade. I mean, when I think about all the different product categories this company is going to get into over the next decade, all the store expansion, and then SKU expansion in the stores, when I think about all that, it doesn't feel like a very high risk stock for me. However, I can understand some folks looking at the valuation and being like, hey, it's $1.6 billion. They're doing this for revenue now. Why does it deserve to be valued here? Okay. So we'd put that in the higher risk, higher reward portfolio, right? Next stock up here I would buy in the high risk, high reward portfolio is Planet 13. So Planet 13, this is a play on legalization of MJ, hopefully coming soon, right? Which is a risk because we don't know. Like maybe it's 10 years in the future and they still haven't federally legalized MJ. I don't know. I expect that to come within the next few years. However, you never know with this. It's dealing with the government. It's dealing with laws and those sorts of things, right? And I can tell you Planet 13 would be able to expand their business even much more dramatically and even at a better rate, essentially, if there was federal legalization, because then you could talk about shipping product over state lines, which, keep in mind, Planet 13 owns a lot of their own brands, which it would be beautiful to just have some massive production facilities in different parts of the country and be able to ship product all over the United States. Right now, Planet has to open up a store in that state to then begin to hopefully sell the product throughout the state, okay? So it's not the best process. However, Planet 13's business model is absolutely amazing. I've been getting photos out of the Orange County store. A lot of people that have been going to the Orange County store have been posting photos inside the private stock group, inside the Discord chat for Planet 13, and it looks very, very busy. I'm going to try to visit the store at some point in July. I'm going to try to make time. I'd make it out there to Orange County. It's like a 4-hour drive from here. I'm going to try to make time and visit that store. It's absolutely amazing. And I'm expecting them to start opening 2 stores or more per year starting actually in 2022. Okay. Huge revenue opportunity, huge opportunity for that company in general. Voyager Digital would be the next stock up here. Another high risk, high reward stock. So this is a crypto brokerage, but longer term, they want to become a stock brokerage as well. They want to have debit cards. They want to have credit cards. They want to have banking products. They want to be pretty much like a financial institution, like almost like they want to be your bank and your brokerage and everything at the end of the day, right? And so this is a company that it is absolutely a risk, because right now this company is pretty much almost 100% dependent upon crypto. And crypto is going through, starting to really go through a bear cycle, right? We saw Bitcoin top out at 65,000-ish, right? Bitcoin's about half that today. And so now all of a sudden all the cryptos are pretty much going through like a bear cycle. And this is making Voyager Digital have some tough times in the short term. However, when I look at the opportunity that company has over the next 5-10 years, I mean, that's one of those stocks that, could be a 10-bagger, like that type of opportunity in front of the stock. So I'm willing to take that risk in a high-risk, high-reward portfolio. So those are 3 stocks I would buy in a high-risk, high-reward portfolio for my son: Tattooed Chef, Planet 13, Voyager Digital. Yes, they all come with their risks, but man, is there some crazy potential upside in that, okay? So that covers high risk, high reward portfolio there. That's my favorite one of the bunch, by the way. And now let's talk about the Maniac, okay? Let's talk about what I would do if one of my children was like, I'm trying to 2x my money this year, Dad, or over the next year or so, or triple up or quadruple up or something like that. I say, okay, you're prepared to lose it all. And if they said, yes, I'm prepared to lose all $1,000, but I want to try to double up or triple up my money, I say, okay, you maniac. Okay, here's what you do. First, you're kicked out of the house. Okay, no, just kidding, okay? So I would split the money half and half into each of these 2 things, okay? January 2023 call options. First stock I would buy the call option is Wynn Resorts at $100 strike, okay? Now, Wynn Resorts, their business is coming back amazing in Vegas. However, there is some risks with this stock. One is Macau. Macau, I expect them to open up Macau more and more throughout the back half of this year and moving into 2022. And I think Macau, when that's all opened back up again and travel's going crazy again, I think Macau is going to boom. The risk is there's talk now about potential new Rona variants, right? And I mean, I just saw today, Japan's not going to allow the spectators for the Olympics because they've had a slow rollout for the Rona shots, and only like a quarter of their population has at least 1 shot so far. And so that's a risk, okay? The risk is that in Asia, the shots just aren't getting out there fast enough. And let's say Macau is still a ghost town, which it isn't a ghost town, but it's more of a ghost town compared to what it usually is at, right? Let's say that happens for the next year. That's what makes us a much higher risk play, right? However, on the reward side, let's assume Vegas continues to ramp, convention comes back, and then on top of that, the Boston property continues to ramp up business, because I believe the Boston property is doing some pretty good numbers right now. And let's say on top of that, Macau comes roaring back, and Chinese New Year's crazy, and 2022 ramps. I mean, those win calls are going to be looking pretty dang good at a $100 strike, okay? But it is higher risk. It absolutely is, okay? And so there's no way we can't deny that. I feel more comfortable actually in 2024 calls, but as of recording this video, this How to Invest $1,000 video, as of recording this, there's not 2024 calls out there yet. Got to wait about 2 or 3 months for that, okay? The next stock I would buy January 2023 calls in is Corsair Gaming, the one we talked about earlier, right? CRSR. I would buy those at about a $30 strike price that expire in 2023. The risk in with this one, okay, I don't look at the business model as a risk or the valuation, right? Gaming, streaming products, they continue to innovate, they continue to come out with new products. That's not a risk at all. The valuation is also not a risk. We're at a forward P of 16? So there's really no risk, in my opinion, in the business model or the valuation. The risk in this one is essentially this Eagle fund. They've been selling out shares, okay? They've been a big holder of this one. They made a ton of money, and they're looking to put money in other places. So they're a seller actively in the market. And this kind of limits Corsair Gaming's upside potential in the short term. However, I believe as soon as they stop all this selling pressure, I think the stock could be a 2x fast. Let's just put it that way, because you could easily slap a 30 or 40 forward P on the stock, in my opinion, and it would make sense. So in my opinion, that's coming for this company, but we don't know when the selling subsides. Is it in this year, in 2021? Do you have to wait to 2022? Or is it all the way out in 2023? That would obviously be a bad scenario, right? And, when you got that big of a seller that owns that many shares, it's hard to get that stock to go up, even if the company comes out with amazing numbers and beats all their earnings and things like that, right? And so that's why I would call Corsair Gaming, as far as those $30 strikes, a little bit of a risk, because you just don't know when the selling will subside from that big fund that owns a ton of those shares. However, when it does, those calls could, triple up, quadruple up real dang quick. You just don't know when. That's why I say, this is one of those, hey, if Rona starts taking off again, right, and then all of a sudden we're in a situation where Corsair Gaming can't move up because that fund's selling out or something like that, that could make for a very ugly situation in the Maniac portfolio. But hey, they said they were willing to, risk it all. And so yeah, that's how I would invest $1,000 in the stock market, based upon different things out there: safe, medium, high risk, high reward, and a Maniac. I hope you guys enjoy this as always. Don't forget to smash that like button before you leave. If you want to take advantage of that Webull deal, do so right down there. If you're looking to apply for the private stock group, check out, that's going to be linked in the description somewhere down there, as well as a Facebook group, things like that, guys. Much love and have a great day.